going on, guys? How are you? This is Shocks, and today we're going to be looking at the V75 strategy that has proved useful and accurate in my trading. So I'm going to show you everything you need to know to trade this particular strategy. So the strategy comes in three parts, right? Number one, we have the first impulse from this point to this point. We're calling that A. Then number two, we have this consolidation in between here, this consolidation that looks like a channel, that looks like a range, and we're going to be calling that part B. And we have the last impulse here that you see, and if you can see this, you can see that that is the impulse that we want to be involved in, that is the impulse that we want to be trading, and that is going to be our C. So we're going to be looking at what we call the ABC strategy. So guys, pick up your notebooks and pens and let's start writing. So what we're going to be doing here is we're going to be using these three things with the Fibonacci, right? Right, so let me explain a bit on what we want to be doing. So this is an ICT strategy that I'm going to be showing you. So number one, we have the impulse move that goes up. Then we have the consolidation that is retracing. So that consolidation, in that consolidation, that's where you are going to be looking for your trades. That's where you are going to be looking for your entry, right? And you might be asking yourself how, and I have the answers. So how you're going to be looking at that is by incorporation of the Fibonacci tool. And which levels are you looking at? You're looking at the 61.8 level and the 79% level. And as you know, those are the OTE levels. So you're going to be looking at this and in a particular day. So all this has to occur in one single day. Do you understand that? It has to occur in one single day. If you're looking on a Monday, all these things has to be there in this pattern on a Monday. If it's a Tuesday, the same thing. Wednesday, the same thing. So any single day you're looking at, this is what you need to see. And for those who don't understand what's Volatility 75 index, guys, Volatility 75 index is a synthetic index that is offered by a broker by the name Deriv. And if you want to register with that broker so you can trade this highly volatile and profitable index, you can find the links in the description down below. You can find the links in the comment section and get trading. So what you need to do here is identify the impulse and the consolidation. Then you can be sure that this last part is coming. You don't have to identify it because you are trading without that. So if you look at it, this pattern will look like this before you take the trade. It will be looking like this. So you buy here and it will give you this other impulse that we are talking about to do this to you. So let's go to charts quickly and try to see. Right, so if you come here, this is the V75 chart, right, on the M15 time frame. So what we are looking at is this particular pattern that you see here. So this is not what we want to be trading, but I want you to see the makeup of the pattern. We have A, we have B that is marked, and we have C. So this is what we want to be doing, and this is exactly what we will be looking for. So this is the top of the top of the first impulse, and this is the low of the first impulse. If you drag your Fibonacci right here, you will see that we have the 61.8 level and the 79.0 level, and this is the zone that you are looking for. And as you can see, if you were to trade this, your stop loss would have got hit. So what I want you to know before we go any further here is your stop loss is not going to be over the 79% level all the time. Sometimes you're going to put the stop loss over the 100% level or the 0 level here. You're going to be using this as your stop loss. So we have 1 and we have 2. So what determines where your stop loss goes is the distance between the 79 and the 100 level, right? If the distance is too small, then you use the 100 level, and if the distance is too big, then you use the 79 level. So I'm going to be showing you all this as we go, right? Then we have another setup that you see in this particular area, right? And as you can see, we have the 61.8 level and the 79.8 level. And in this case, you are going to be putting your stop loss above the 79.0 level, and the 61.8 level is going to determine where you can start looking for entries, and you can press your entry, you press your sell any area inside the inside the yellow zone, right? So it can be at the right at the 61.8 level by use of a limit, or you can enter manually after you see this black candle, or you can use that as a confirmation of a sell, and you can use a green candle as a confirmation of a buy, depending on which color scheme you are using in your on your MT5, right? Then we have this impulse. This is the first thing that you have to see, the impulse, right? Then we have price retracing back in a channel, as you can see here on your screens, right? Then you can mark the 61.8 level and the 79 and be looking for this for your entries. And if you have a limit, it was going to get picked at the 61.8 level here, and you are looking at that. And the other thing you might be asking yourself, I'm talking about stop loss, I'm talking about entries, and if you want to know where your take profit is going, it's going to the next possible or swing high or swing low. So we are just using the low or the high that we would have used to map out our Fibonacci, right? So this is going to be what your take profit. Do you understand what we are doing here? And if you have this as your high, this as your low, you enter here, this is going to be what your TP at right at the bottom here. That's what your TP is going to be made out of. And if you look at this, we have number one, the impulse, which we are calling A. Then we have the consolidation, the channel consolidation here that we are calling what? B, right? Then we have the 61.8 level, the 79.8 level. That is your what? That is your zone. Then we have the 79.0 level and the 100 level. Those are your potential stop loss levels. And to determine that also, you can look at the distance from the 61 to the what? To the potential take profit level, so that you know how you are risking your trade, so that you can get a favorable risk to reward ratio. I hope you are getting what I'm trying to get across to you. Then we have this as the impulse, then we have this as the consolidation, and the yellow zone as your point of reference, right? So what you are doing is you are getting your trades in the yellow zone, and you are taking your profits at the top here. And guys, as you can see, I'm not considering every day. You have to know the days which give you the best setups. And as you can see, you identify the A and the B. Those A and the B have to give you what I call a very perfect setup, an Instagram worthy setup, right? So if you don't see something that you would want to post, don't trade, right? So it's simple as that. You have to be very picky, and you have to be very careful when you are choosing your setups, right? So you look at this again, we have this as your as your range, and if you drag your Fibonacci, the 61 and the 79, they look very, very, very good, and that's what you want to be doing, and you are getting your trades at those particular points and at those particular zones, right? And you drop like that. This is what you are seeing, and this is what you need to be trading on a daily basis, right? So we have this impulse here. We started from this point, as you can see, and you have the 100 level, the 0 level, the 61.8, the 79 level, and as you can see, we have the consolidation channel that you need to be seeing in every setup of Volatility 75 on Deriv.com, that you need to be seeing every day, right? So if you have an account already, just go and try this. Please start on demo, and if you are making profits, you're making progress on demo, just deposit some money in your Deriv accounts and be trying this strategy. If it works, come back to this video and tell us how it's going for you. And if you have any question, and if you are confused about anything that you're talking about here, you can ask in the comments, right? I'll be there to answer your questions. I hope this has been helpful to you guys. I hope you have understood what we're trying to say, and you have understood the gist of the strategy, the gist of the story. And guys, I hope you will be trading what you will be seeing. Hands to the head. Salute.